Hello and welcome to BOI Weekly. I am Kayode Alayode. Since Nigeria was declared to have officially slid into recession in late August of 2016, there have been several efforts to restore the country, which had just a few years earlier been declared the largest economy on the continent. Some of these efforts include discussions on policy shifts, bordering on diversification of the economy, attracting investors, capacity building for local businesses, and issues surrounding fiscal discipline and creating a conducive environment for businesses. One of such discussions was organized recently by the Harvard Business School Association in Nigeria. So they invited the acting MD, Bank of Industry, Waheed Olagunju, to shed light on how to reduce interest rates and provide alternative sources of funding for the real sector using the BOI model. Also on the show, the Bank of Industry has signed a memorandum of understanding with the Office of the Senior Special Assistant to the President on Foreign Affairs and the Diaspora. It's a scheme expected to provide structured financial resources to Nigerians in the diaspora who plan to invest at home. We have more in just a moment. Stay close. The Economic Affairs Circle of the Harvard Business Association of Nigeria. The group was established to promote private sector investment in the economy so as to stimulate growth and advocacy. They meet ever so often. The aim of this particular forum is to proffer solutions to the high interest rate in the country. So they invited the acting MD, Bank of Industry, Waheed Olagunju, to speak about the BOI as an alternative source of financing in a high interest rate environment. His invitation comes on the heels of the bank's outstanding performance and credit delivery and improved ratings across board till date. Mr. Olagunju identifies excellent corporate governance and earning investor confidence through fiscal discipline as ways of making more affordable funds available to entrepreneurs in Nigeria. These are values by which the Bank of Industry operates. He starts with what sets the bank apart from others in terms of fund sourcing and capital structure.
Raising naira in the Nigerian economy is a challenge because of the MPR and the government cost of borrowing, double digits, and clearly entrepreneurs complain that we cannot genuinely move the economy around using those kind of resources. We cannot make progress. We can only trade with those level of interest rates, and the real sector is what is of concern to you. By definition, we're supposed to intervene in sectors of the economy where market-driven institutions will ordinarily not intervene. And that speaks volumes, which means that our resources too have to be sub-market in terms of pricing in an economy like this. 2016 was our 15th year in terms of financial operations. And glory be to God, year on year, the bank has been growing and been waxing stronger, such that as of last year, we recorded our best financial performance. And we built on the experience we acquired in IDB, NBCI, and NAFOND in designing the credit policy and other processes and procedures of BOI. In designing how an insurance will work, you cannot but take into account the environment in which it's going to operate. So we are glad to report that the association is right in asking the Bank of Industry to come and address this subject, because we are well positioned now to be able to mobilize resources from within and outside the country to support Nigeria's industrial development. The confidence in the institution keeps increasing every day. We have not recorded a single case of fraud in the Bank of Industry since 2001. I know, because I was Company Secretary and I'd been Secretary since 1997 for 20 years. So I've been in management and board, and I'm in a position to know. And the quality of staff we recruit year in, year out keeps improving. And we are very, very choosy. The staff strength as of 2016 was just 277, with a risk asset of 566 billion. Other banks with similar risk assets have about 3,000 to 6,000 staff. The ratio of risk asset to staff stood at 4 billion as of December last year, and then staff contribution to profit was 62 billion. So in terms of efficiency ratios, we also stand out as one of the best in the country. The constraints could be the absorptive capacity of the economy. What kind of customers are we dealing with? Because we just don't want to lend for lending's sake. Because a good credit officer is not only he who throws money out, it's how the investments perform 2, 3, 4, 5 years down the line. And the fact that the ratio of our non-performing loans have been deteriorating. In 2014, it was 6.8%. In 2015, it was 5.87%. And in 2016, it dropped to 3.72%. In 2016, the industry average, according to the central bank, went up to 14%. So in a recession year, in a very bad year, the Bank of Industry was able to come up with such fantastic results. And that speaks to the quality of the management and the risk management framework, enterprise-wide management that is in place. We always assume worst-case scenario. So going back to the absorptive capacity of our customers, who do we want to lend to? Because we are government-owned, out of every 10 prospective customers who come to BOI, 7 to 8 believe they're coming for their own share of the national cake. So we need to sift the serious ones from the unserious ones. Those who are even serious, some of them still have genuine capacity limitations. So that's why we need to take on board the absorptive capacity of our customers. However, borrowing on experience of other DFIs, DFIs thrive through indirect lending. We cannot get up to 5 to 7 trillion in the Nigerian economy lending directly. BNDES of Brazil, they've been the most impactful DFI in the world with customer base of about 300,000. And they are able to achieve this mainly through indirect lending. In other words, they work through commercial banks. Same thing, KfW of Germany. And that's what we've been trying to do at the Bank of Industry through our bottom of the pyramid. We've been dealing with microfinance banks. We give them lines of credit at about 10%, and they lend maximum 17%. In an economy where other microfinance banks, through their own resources, lend as high as 30, 40% per annum. So we still believe this is good. Now, we're experimenting too with commercial banks. We've started with one commercial bank, and that commercial bank has drawn down. We will not announce here, but with the success story of that commercial bank, we're able to do more business with commercial banks. And they have the network, branch network that we do not have. DFIs are not supposed to have are not supposed to replicate those branch networks because we are not a deposit money bank. We are not able to keep an eye on their cash flow. So it's in the best interest of a DFI to do more of indirect lending through deposit money banks so that they can keep an eye on those customers. So we hope to be able to achieve those numbers and the impact through indirect lending.
Mr. Olagunju also talks about the bank's financial target as well as other areas where the bank plans to deepen its impact.
The commercial banks are also in a position to help people with the security arrangements. We've also performed some experiments. We've been able to lend based on the cash flow of a customer because we are sure that a partner commercial bank would man the box office. It's a film company, projection company. They did a diasporan who honed his skills abroad. We knew he had the capacity. Character-wise, we're also satisfied. He was ready to put his skin in the game in terms of capital. We knew that the condition was okay, but he lacked the collateral. Yes, there are 5 basic C's of credit. He was able to tick 4. But we didn't think we should turn him down because he didn't have risk asset. I mean, he couldn't have a collateral in Nigeria, and he had lived in UK for more than 20 years. It's okay now, we are satisfied with your character. Who's your commercial banker? Commercial bank, can you get your staff to man the box office? at the cinema house. And they did. So they were the ones selling the tickets, and they were banking. And as they were banking, they were sweeping to BOI as I went due. And a facility that was meant to last for 3-4 years, he was able to repay within 18 months with that kind of arrangement. So that's another advantage of working through commercial banks, because they will be able to do what we cannot do. So under our 5-year strategy plan that we validated last year, we are hoping to be able to lend up to 1.2 trillion by 2019. We have done about $1 trillion in 15 years to about 25,000 customers. But we're hoping to be able to do another 25,000 at least over the next 2.5 years, because we're in the middle of the 5-year strategy plan now. And in the process, we hope to create about 5 million jobs. But all this, again, depends on the condition. What is the environment in which we're operating? Political, economic.